Welcome to my YouTube channel. This is your ACCA F9 Financial Management teacher Naveed. We'll be doing a question on inventory management and receivable management today. The question is called question PKA from December 2007. December 2007. The reason I'm doing such an old question is that it tests economic order quantity in detail, it tests receivable also, it tests lead time and buffer stock. And once we do this question, I'll tell you how to do it in comparatively easy way also. And the question you can obviously Google if you want to, but I have provided you the link in the description also. You can download from the link that I have provided you. This question also includes some forex, but we'll ignore that because today we'll be just discussing inventory management and we'll be discussing receivables management, right? Alright, so the first question, part A, is saying identify the objectives of working capital management and discuss the conflict that may arise between them. This is comparatively an easy question, but don't get excited. It's just for 3 marks. So just give him 3 small paragraphs and that would be enough, right? So what are the objectives of working capital management? Well, there are 2 main objectives: liquidity and profitability. So it's liquidity and profitability, right? If you keep low level of working capital, you will improve your liquidity, right? I'll give you an example. For example, if we keep low level of stock, for example, we'll tie up less money in the stock and then we'll have more money in our pockets, right? Similarly, profitability. If you increase the level of working capital, though liquidity will not be desirable, but your profitability will increase. So the second part of the question is, in this question, if you see, the first part of the question says that what are the objectives of working capital management. So give him the objectives of working capital management, liquidity and profitability. And the second part of the question is that what is the conflict between the objectives of working capital. So the second conflict between the objectives of working capital are obviously liquidity versus profitability. So basically there's a trade-off between liquidity and profitability. If you improve your liquidity, then you won't be able to improve profitability. So basically you have to tell to the examiner that you will be looking for a balance between liquidity and profitability, or you can say that you will be looking at looking for a balance of working capital. You should not keep too much working capital, you should not keep too less working capital. So objectives and conflicts, and this way the examiner can give you can easily get 3 marks out of 3 marks. But don't write too much because you'll be out of time if you write too much in the exam for such a simple question. You can say that this is kind of gift from the examiner to you. He won't give you that gift nowadays. Well, I hope so you'll get the gift, but I don't think so. Okay, so the second part of the question is calculate the cost of current ordering policy and determine the saving that would be made using economic order quantity. So again, there are 2 parts of the same question, and the first question is saying calculate the current cost of current ordering policy, and the second part of the question is determine the saving if you use economic order quantity rather than your current policy, right? The third question is about receivables management, so we'll skip that at the moment. We'll see we'll solve the first 2 parts, part A and part B first, and then we'll come to part C. So let's start reading this question. If you want, you can pause the video and read it once, and then you'll read it with me. Alright, so PKA is a European company that sells goods solely within the Europe. The recently appointed financial manager of the PKA has been investigating the working capital management of the company and has gathered the following information. Inventory management. The current policy is to order 100,000 units. When the inventory level falls to 35,000. So in one order currently you order 100,000 units. And when the inventory level falls to 35,000, then you order that 100,000. And this is what we call reorder level. When you reach to this level, then you order 100,000. So let's say if this is your inventory and you are using the inventory in production, and when you reach to 35,000, then you order again. And how much do you order? 100,000. So this would be your reorder level, right? Okay, the forecast demand to meet the production requirement during the next year is 625,000. So this is basically your demand. Demand D. The cost of placing and processing an order is 250 euros. So the cost of ordering one order, I'll call it CO, is 250 euros. While the cost of holding a unit in the store is 0.5 or half a euro, and this is cost of holding per unit per year. So cost of holding one unit for 1 year is CH 0.5 euros. Both costs are expected to be constant during the next year. Orders are received 2 weeks after being placed with the supplier. Okay, so once you place the order, then you get that order within 2 weeks. This is what we call lead time. You should assume a 50-week year and the demand is constant throughout the year. Right? Well, this is the assumption of economic order quantity. So basically it's giving you the hint that you'll be using economic order quantity somewhere in the question, right? Alright, so what was the requirement? The requirement was in part A we have done already. Calculate the cost of current ordering policy. The cost of current ordering policy. So let's solve this question now. Part B. Alright, so what would be the total cost of the ordering policy, the current ordering policy? What would be the total cost of current ordering policy? Question number 4, sorry about that. So current ordering policy, what is the cost of current ordering policy? So this cost will include basically two costs. Cost of ordering and cost of holding. If you add cost of ordering and cost of holding together, this will give you total cost. And what is the formula for the cost of ordering? When you calculate cost of ordering, obviously you multiply number of orders with the cost of one order. Well, the cost of one order in our question is, we said it is CO, and the cost of one order was, I guess it was $30. Cost of one order, CO, no, that's 250 euros. 250 euros. So the cost of one order is 250 euros. And number of orders, well, we are not given number of orders, but if you use the formula which is demand divided by quantity, it will give you number of orders. Like the demand is we said that the demand was 625,000 in the whole year, and then you order 100,000 in one order, right? So this will give you number of orders, and 625,000 divided by 100,000 multiplied by 250,000 would be your total ordering cost. 625,000 divided by 100,000 multiplied by 250 would give you 1563 $1563, and that would be your total cost of ordering. And then your cost of holding. For the cost of holding, you have to multiply average inventory with cost of holding 1 unit for 1 year. So average inventory multiplied by cost of holding 1 unit for 1 year. But you have to be very careful. If you are given lead time in your question or minimum inventory in the question, then you have to add minimum inventory to that also. So minimum inventory level or minimum inventory, which is also called buffer stock, right? Are you given minimum inventory in the question? No, you have to find it out, right? So let's put figures inside first. So cost of holding stock would be average inventory. The formula to find average inventory is Q quantity divided by 2. This would be your average inventory, right? So quantity divided by 2 plus minimum inventory multiply by cost of holding 1 unit for 1 year, which is CH. So cost of holding stock would be quantity. How much is the quantity? Well, we order 100,000 in one order, so 100,000 divided by 2. Minimum inventory, we are not given minimum inventory and we have to find it out, and I'll say this is your working 1 multiply by cost of holding 1 unit for 1 year, and I think I remember it, and it is half a euro, 0.50 euro, right? And I'll leave some space for it to calculate the cost of holding, and we will find our minimum inventory here, and I'll leave some more space to calculate the total cost when we will add cost of ordering and cost of holding together. So working number 1, minimum inventory. The formula to calculate minimum inventory is minimum stock level, minimum inventory level is your reorder level minus average usage in the average lead time. So average usage multiplied by average lead time, which basically means that how much inventory you will use when you have not received the inventory yet. You have ordered it, but you have not received the inventory yet, right? So obviously the higher is the time and higher is the usage between in that time, you will keep high level of minimum stock. So minimum stock level is equal to reorder level 35,000, average usage, well, the demand was 625,000 and we have 50 weeks in the year, so this will give you usage per week or average usage per week multiplied by 2 weeks lead time. As per our question, 2 weeks is the lead time, so this will give you usage of the 2 weeks time, right? So minimum stock level is $625,000 divided by 50 multiplied by 2. This is 25,000, and 35,000 minus 25,000 will be 10,000 units. So we should keep 10,000 units. At least we should keep 10,000 units in our stock, and that is the minimum level of stock. So now the cost of holding is, we'll put the figures in, and that would be 100,000 divided by 2 plus 10,000 minimum stock. And our cost of holding would be 100,000 divided by 2 is 50,000. 50,000 plus 50,000 plus 10,000 would be 60,000 multiplied by 0.5 would be 30,000. So 30,000 is our holding cost. So our ordering cost was 1,563 and our holding cost is 30,000, and if you add them together, this will give you 30,000 plus 1,563, that would be 31,563. 31,563 euros. Obviously everything is in euros. So the question was, what is the total cost of current ordering policy? So the current ordering policy will cost us 31,563. Now we have to compare that with the saving from economic order quantity, because the second part of the same question is saying they determine the saving that would be made using economic order quantity. Well, to calculate the saving from economic order quantity, obviously you have to calculate what would be the cost from economic order quantity, and then we will see if economic order quantity is costing us more or our current policy is costing us more. So let's calculate economic cost from economic order quantity. So cost of economic order quantity. If you order in economic order quantity, then what would be the cost? Well, the formula for economic order quantity is 2 fish and chips. Basically 2 multiplied by cost of ordering multiplied by demand divided by cost of holding, and then the square root, right? I call it 2 fish and chips because it looks like 2 got divided by chips. And maybe in the restaurant the square root is the restaurant. right? So economic order quantity is 2 multiplied by cost of ordering, cost of one order, which is 250 euros, multiplied by demand, which is 625,000, divided by cost of holding one unit for 1 year, which is half a euro, right? So if you use your calculator and find the economic order quantity, that would be 2 multiplied by 250, hold on, 2 multiplied by 250 multiplied by 625,000 divided by 0.5 square root, that would be 25,000 units. So economic order quantity policy will suggest that we should order 25,000 units in one order. Let me remind you that currently we are ordering 100,000 units in one order, and economic order quantity suggests that we should order 25,000 units. Well, if you order less, obviously your number of orders will increase and your ordering cost will increase, but your holding cost will decrease. And holding cost, as we calculated above, it was 30,000 if you order 100,000, right? So now let's calculate the cost using the same formula, same methodology. Using the same methodology, we'll calculate the total cost for economic order quantity policy, right? So cost of ordering and cost of holding. As we said that the cost of ordering is number of orders which is basically demand divided by quantity multiplied by cost of one order, which is CO. So demand 625,000, demand is 625,000 divided by quantity. This time we'll order not 100,000, we'll order 25,000, multiply by cost of one order, which is 250 euros, and this would be equal to 625,000 divided by 25,000 multiplied by 250. That would cost us 6,250. And then the cost of holding, same formula would be used, average inventory plus minimum stock multiply by cost of holding one unit for 1 year. Sometimes the student asks that why we should add minimum stock in the formula, why we have added minimum stock, because this is the level of inventory that is not going to change. It will always be here. The minimum stock will always be here. It's not going to change, right? But the rest of the inventory, obviously it decreases when you use it in the production. It increases when you have delivery outside, right? So the rest of the inventory will change, but this is not going to change. This will cost us always, right? So you have to multiply, you have to add minimum stock when you calculate your cost of holding, because you have to hold it every time, right? Then it means it is going to cost you, right? So cost of holding is average inventory, which is quantity divided by 2 plus minimum stock. We already calculated, that was 10,000. Cost of holding one unit for 1 year would be half a euro, which is quantity. This time quantity is 25,000 divided by 2 plus minimum stock is 10,000 multiplied by 0.5, and cost of holding would be 25,000 divided by 2 plus 10,000 multiplied by 0.5, and this would cost you 11,250 euros. So total cost of ordering is 6250, total cost of holding is 11,250, and when you add them together it will give you a total cost using economic order quantity obviously, and plus 6250 will be 17,500. Our previous policy or our current policy will cost us 31,563, and economic order quantity would cost us 17,500. So obviously economic order quantity is better, but this is not the question. The question said that what would be the saving. So the saving would be 31,563 minus 17,500, and that would be the savings using economic order quantity would be 31,563 minus 17,500, and that would be equal to, so 31,563 minus the answer would be 14,063. So you would be saving 14,063 if you use economic order quantity. Is there anything else that has been asked? Oh, no, you haven't been asked anything else. And in the start of the lecture I said that I'll be telling you how you can calculate this question in a slightly easy manner, but it will give you the right answer, but this won't be right for this question, and I'll tell you why. Examiner basically is asking you calculate the current ordering policy, so you have to calculate the current ordering policy, and then you have to calculate the savings, so you have to calculate obviously economic order quantity also. But there is a quick way that you can use to calculate the savings directly, right? Rather than doing the long calculation, you can calculate the savings directly. But obviously this won't be relevant for this question, but this can be relevant for the MCQs questions, for example, because it will give you less marks, and you would be expected to calculate it quickly, because you will not have much time to spend so much on a question like this, right? So basically what you can do is if you see you have been given minimum inventory in both economic order quantity and our current ordering policy, right? Or other words, we can say that the minimum inventory would be the same. This is not going to change. By the way we order our inventory. This is not going to change. Minimum inventory would be the same. So if you think that you are comparing two policies and there are two things that would be present in both the policies, maybe you can ignore the minimum inventory in both the calculations. So if you calculate the minimum inventory in both the calculation, then obviously you don't have to do all these working to calculate minimum inventory, that you calculate 10,000, because you ignored it, right? So if you ignore it, and let's quickly recalculate it. and this hasn't been asked in the exam. Let me tell you that again. So recal savings, it hasn't been asked in the exam, but maybe next time you'd be asked. So if you ignore minimum inventory, then the current policy would be ordering cost plus holding cost, and the ordering cost is obviously number of orders, which we said that the number of order is demand divided by quantity multiplied by cost of one order. So it's 625,000 demand divided by 100,000 quantity multiplied by cost of one order 250, and this would be 625,000 divided by 100,000 multiplied by 250, and that would be 1563. We have already calculated this one. And holding cost, because we ignored inventory, it would be average inventory multiplied by cost of holding 1 unit for 1 year, and the average inventory is Q divided by 2, quantity divided by 2 multiplied by CH. Quantity is 100,000 in our current policy, divided by 2, and cost of holding 1 unit for 1 year is €0.50. So that is 50,000, and 100,000 divided by 2, 50,000. 50,000 multiplied by 0.5 would be 25,000. Now total cost would be 26,563. So 26,563, that would be total cost. Now the total cost using economic order quantity, well, we said that the economic order quantity, as we calculated above, economic order quantity was 25,000 units, right? Now total ordering cost, cost of one order is 250, demand is 625,000 divided by quantity, this time 25,000, and our ordering cost would be 625,000 divided by 25,000 multiplied by 250 would be 6250, and our holding cost, and we'll ignore minimum inventory over here also, so it's quantity divided by 2 multiplied by CH, and the quantity is, as we said above, 25,000 divided by 2 multiplied by 0.5, so 25,000 divided by 2 multiplied by 0.5 is 6250, and the total would be 12,500. Now, did you see, you will not be spending so much time on this. And the other thing, that the point that I want you to see is that when you don't have minimum inventory in the question, okay, that is ordering cost and holding cost, and this is your total cost, 26,563, and ordering cost and holding cost, and this is your total cost. You see, you notice ordering cost and holding cost are the same, and this will be like this when you don't have minimum inventory in the question. So if you wanted, maybe you could skip this part of the calculation also, and you could write 6250 directly, because in economic order quantity, holding cost and ordering cost would be the same when you don't have any minimum stock, right? Now if you want to see the savings, Savings would be our cost from current policy, which is 26,563, and cost from economic order quantity, ignoring the minimum inventory on both of them, that would be 26,563 minus 12,500, that would be 14,063 euros. And if you could see, we have calculated 14,063 in our previous calculation, also 14,063. So if you want to calculate saving, then you can ignore minimum inventory on both sides. Basically, you can ignore minimum inventory on both the policies, and then the shortcut would be that you don't have to calculate obviously minimum inventory, and the second one is that you don't have to do the holding cost calculation again, because ordering cost and holding cost would be the same, right? This part of the question was complete. You don't have to do it again. I've just did that to explain it to you so that you understand it better. You don't have to give it to the examiner, right? Alright. Now, let's see the second part of the question. Second part of the question, or the third part of the question, or part C, I should say actually. Discuss the ways in which PKA could improve management of domestic account receivable. So if you see, we are given information on receivables over here in the second paragraph, and it says domestic customers are allowed 30 days credit, but the financial statement of PKA shows that the average account receivable period in the last financial year was 75 days. Well, here's a question for you. The company has allowed the customer to pay in 30 days, but the customers actually pay in 75 days. So which one would be our receivables days or receivable period? Well, the answer is that the actual time that the customer takes normally would be our receivable period, not 30 days. 30 days we have allowed them, but the customer may not pay always on time. So as we can see in this case, that the customers are paying late, they don't pay on time. And the second statement is saying that the financial manager also noted that bad debts as a percentage of sales which are on credit increased in the last financial year from 5% to 8%. Receivables. So let's see what was the question. Let's see the question again. Discuss the ways in which PKA could improve management of domestic account receivable. How many marks? 7 marks. Well, you have to find what are before you suggest PKA that what they can do about the receivable management. Obviously you have to find out what are the weaknesses first. So you have just identified 2 weaknesses. First one, customers pay late, receivable days are more than we have allowed them, and the second one, that the bad debts have increased from 5% to 8%. So part C is part C. So weaknesses, a weakness for our questions, or you can say the weaknesses that we have found in the company PKA. The first one, credit allowed, and then you can give and you can say it to the examiner that credit allowed 30 days, but customer pay normally after in 75 days. And the second weakness was bad debt increased from 5% to 8%. Well, I'm using bullet points, but obviously you are not going to do this in the exam. You have to explain it properly to the examiner that the company has allowed 30 days credit, but the customers pay in 75 days. And also the bad debt has increased from 5% to 8%, and these are your observation. And then your suggestions. What could be the suggestion? Well, to encourage the customer to pay early, because they are paying late, they are paying after 75 days. Maybe we can offer early payment discount. What else can we do? Maybe we should start strict management of our receivables. What do you mean by strict management of receivables? For example, if the customer don't pay on time, you start calling them, you start sending letters to them. For example, you can take legal action, right? Obviously you don't take legal action normally for a smaller amount. What can be the other suggestion? Maybe you should start a facility, you should take facility of factoring. For example, you should take help from a factor. And maybe before selling, next time, before selling anything, you should check the credit worthiness, right? Maybe you should start charging interest on overdue debt, right? So you can write as many things as you want, right? So start your checking credit worthiness, or start charging interest, or many other things that you can write. But make sure, again, question is for 7 marks. Maybe you can write 5 to 7 paragraphs, not more than that, right? If you write too much, then obviously you'll be wasting time in the exam, and basically you should try to get your easy marks first, and then if you have time, then maybe you should keep some space for the rest of the questions. If you have time, then maybe you can write more. Alright guys, I think it was helpful. Thank you very much. Good luck.